Hi and welcome. In this video I'm Stefano, one of the XL coaches involved in the financial market since 4 years, and in this video we will start a path in which we will cover some basic stuff and also advanced stuff. But even if you're an experienced trader, it's important for you to understand those concepts in order to get those concepts in your subconscious mind and trade with the autopilot. What I mean is that you have to repeat also the basic concept in order for you to understand how market really moves, when you have to buy, when you have to sell, when there could be a change of structure, when there could be a change of character, when there could be trend following, when you have to follow the trend, when you have to get a reversal, and we will see some very important stuff when you can identify the microstructures inside every trend, every impulse or retracement. The difference between impulse and retracement is very important for you to cover all those stuff, even if you're an experienced trader. So keep listening and keep watching this video. So first of all, if we are for example in a bullish macro trend, you can identify the trend by the point, this point, by the higher low and the higher high. So for example, this high is higher than this one, and this low, the end of this retracement is higher than the previous one. So it's very important to identify the trend in this way. The difference between the impulse and the retracement is that in the fact that in the impulse is moving more pips with less time, and the retracement is like if the market is breathing, and the retracement will move less pips in more time. So the goal for you is to understand when the retracement will finish in order to get the price at a discount point. There are so many traders, even with years of experience, that are trying and are struggling because they are trying to get the market and to get inside the market and make profit, entering in the bad and worst zone, like for example in that zone here or in that zone here, and that's very wrong because you are ruining your risk reward. It's important for you to understand that you have to get the retracement also in the deeper point you can. As deep as you can get the retracement, you can wait for the dip, and you could buy. And it's very important because the discount price is very important than the premium price. There are two zones inside an impulse. For example, if you want to use Fibonacci in this way, as you can see, there are two different zones, from 0 to 50% and from 50% to 100%. It's important for you to understand that in that zone we are inside the discount zone. This is the discount zone, and you have to weight the price in that zone here, better from 75 to 100%. This is the best zone in which weights the retracement, in that zone. And then we have this zone from 0 to 50%. We can mark it with another color, for example yellow. Perfect. And this zone is called premium zone, and it's not good for you to buy in that zone. Because if you want to put the stop loss, for example, here is very easy for you, because you can put the stop loss just below this zone, okay? Just below the demand, the last low, for example, a zone of a support zone, and a rotation point, a very, very strong zone. It's difficult for the price, it's more difficult for the price to arrive and to get the stop loss. And then if you want to enter from here, for example, and you want to put the stop loss, a short stop loss in this way, for example, it's easier for the price to get your stop loss, because the price usually it's statistic, guys. Trading is not gambling, trading is all about statistic, and the price sometimes wants to go deeper, and probably it will get your stop loss. So, and if you want, for example, to enter in a bad zone, in the premium zone, but if you want to get the stop loss just below the previous low or the support zone or the rotation point, it depends, whatever you want, you will ruin your risk reward. For example, you will pass from 1 to 4 2.3, for example, and you will win. You will destroy your statistic, you will destroy your ads, you will destroy everything, your trading plan, your risk management, and it's very important for you to understand that. So you have to wait in the discount zone, better between 75% to 100%. Try by yourself. I'm explaining those things because I backtested those concepts since for years, so I suggest you to backtest those concepts and just let me know if you agree with me. It's just a statistic, guys. I'm not trying to create some new concept. It's just statistics, so it's very important for you to keep these concepts and use those concepts. So inside every impulse and retracement, you will find at lower time frames different waves. Inside these, for example, if you are in daily, you will find that in daily there is this impulse and this retracement, then this impulse and again this retracement. But for example, in that situation we are in daily. But if you want to trade in 4-hour time frame, we can change color if we can. But first of all, I'm gonna mark here how you could find the trend in 4 hours. Maybe inside this impulse you will find this situation: impulse retracement. Then you could find inside this point, that could be, for example, a rotation point or a resistance zone, you will find that price start to distributing, change the structure, and the trend will change. The trend will change in 4 hours, and you will find a bearish trend inside this daily retracement, but in 4 hours you are bearish. You have to short the market. Then you will get this point, this higher low in the daily time frame, and probably it's not certain, it's not 100% certain, but it's probably 70% more or less. Then in this zone, in this rotation point, in this higher low daily, you will find a change of structure here, and then you can wait for this break of structure, and inside that point you will continue to go up, okay, and you will find some impulse and retracement. Let me change the color for you if you want to take a screenshot of this. So we are here in daily, and here we are in 4 hours. So perfect, you can change the color, keep this color here the same, okay. So if you want to take a screenshot of that, I suggest you to do that. If you want to understand how the market really moves, let me mark these break of structures here and this break of structure here. Perfect. So that's very, very important. You have to master that, you have to understand that, and once you will find that the trading in general is very simple. You just have to follow the rules that you determine for yourself. It's very important. You just don't have to trade with sentiment, with emotion. You just have to get glacial, and you have to follow your plan. You have to backtest your strategy. You have to get the important concept inside our programs. You will find very, very juicy and value source, very important concept you have to master and you have to understand in order to understand the market in general. And once you will find and you will have mental clarity and you will understand the key in order to become profitable, you will destroy the market. I can guarantee you that. I cannot guarantee you profit, I cannot guarantee you anything, but I can guarantee you that you will find a mental clarity inside our programs, inside those free YouTube videos, and with the other stuff that we are providing to you. So that's the basic market structure you can find, and we will see some examples in the chart. So I prefer to trade, and another important concept that we will cover in the next video maybe is to be careful when you have to select the pairs, the assets you want to trade. For example, me personally, I trade only, I will say, 100% or 99% only Gen 30. Sometimes maybe one trade every 2 months. I trade if I find a good opportunity, the Nasdaq, but I prefer to focus on Gen 30. I decided to get only one pair, only one asset, and I decided to create my own strategy only on one asset. And why I decided to do that? Just because I wanted to focus on one pair. I wanted to understand all the movements about this asset, all the hours, the timing, the news, how the market behaved during the morning, during the London session, during the New York session, and understand the macro trend. I don't have to analyze the market, make a top-down analysis from scratch every time because it's a new pair. I just want to trade that. I'm a scalper. I trade on 3 minutes and 1 minute, and I want to trade on this pair because my strategy is very good, is very profitable. With scalping, I backtested for years, and now I became, since different years, I became profitable with this strategy that sometimes I try to develop, I try to improving, because the market every 2-3 months it could change, because there are new mutation, new manipulation, institutional and banks sometimes change their approach to the market. They try to fuck you, sorry the term, to manipulate you twice instead of once. So it's very important for you to understand those concepts, and every time you have to develop to monitor your strategy in order to improve that and become way more profitable. So we can go on daily, and as you can see, the market structures is even the same. So for example, in that case, we can start from here, and you will find that the market, since this point, creates an impulse, a retracement, a new impulse, a retracement, and a new impulse. So every time is different, the trend is different. You will find that sometimes the impulse lasts more time than a retracement in this case, but it's not important. You have to understand that there are always higher high, lower high, higher low. For example, in this case we have a lower high here, a lower low, another lower high, a lower low, and so on. And as you can see, inside every, let me change the color of this trend line, inside every impulse there are, on lower time frames, as you can see also in the daily, without going to 4 hours, you can see that we have also impulse and retracement inside one structures. So that's very important, guys, to understand that. And once we break this last low or this bigger high, sorry, this high and this bigger high, we will find that the market is changed. Now we are in a bullish trend. We broke this high, and now the market started to create another higher high, a lower, higher low, higher high, higher low, and you have to mark the zone. So it's important for you to understand that in the higher time frames, it's very important to use rotation point in this case. Okay. So this is a rotation point. It was a resistance, and then it became a support. We will cover those topics in a deeper way in another video. In this case, we had this resistance point, then it became a support, and every time the price in higher time frame, from daily to monthly, it will respect very carefully every rotation point. So it's very important, that, guys. And as you can see here, we had a change of structures. Once it will break, once this price, this high is going to, it was broken, the price started to change the character, and then the price went up. So that's very important, guys. And for this video is all. We will cover other topics like liquidity, supply and demand, support and resistance points, liquidity, smart money concept in general, fake chalk, and other topics, other stuff in the next video. So thank you guys for watching this video at the end, and we will see in the next one.